Hello traders, this is John Kicklighter, Chief Strategist for DailyFX.com, here to give you your FX market wrap-up for the past 24 hours of trading and an outlook for what we can expect in the 24 hours ahead of us. Now, this past 24 hours was something of a volatile mix, but it wasn't what I'm really looking for, and I'm sure what you're really looking for, and that is a specific direction. We want the market to pick a direction and to keep going in that direction, because that's where most of our trading opportunities come into view. Now, we did have a pretty straightforward sentiment based on the traditional risk measures. And we can see that in the disappointing fade in the US dollar, a little bit of a pullback through Thursday and early Friday. It's extending that move, while the S&P 500, a preferred measure of risk trends, finally closed over that 1850 level, but it doesn't do so with much gusto, nor does the US dollar's move to the downside look like it's running on a lot of momentum either. This is a general reflection of the exact same conditions we've had over the past week. We do have back and forth. We do have very proximate technical levels. And these are the types of levels that essentially must force a breakout, but they don't necessarily translate into follow-through. Right? That is something completely different. Follow-through is the higher requirement kind of outcome. We're talking about the quote-unquote volume of risk trends necessary to really get these markets moving. If we want to see risk aversion really kick in, or we can look at this in the same way, risk appetite, we need to see these different markets really come together and show and reflect that sentiment. All right. To this point, we're just seeing a few highlights. We're seeing emerging markets move. We're seeing yen crosses move here and there. We're seeing equity indexes move here and there. But they are not showing a consistent and persistent drive. We're not seeing all these markets moving all at the same time relative to a risk-on theme or a risk-off theme. And any kind of jump in activity that we are seeing, like the move from the U.S. equity indexes, are not really keeping. They're not really catching traction and turning into genuine trend. All right? That does not mean that we are not going to get a trend sometime in the future, but it's not coming yet. And if I'm going to take a trade, and under my normal circumstances for time frame, I want to see something that has the potential over at least a couple of days, and more favorably, a longer extended move, so that I can actually take advantage of it. If I'm just getting these back and forths, then it's looking for tight range trades, quick switchbacks, fading moves, falling in line with dominant trends that have pullbacks. Those are the types of trades I have to be looking for, not the meaningful breakouts with follow through, not the Euro USD break that we had this move to the downside just the other day. We highlighted that. That was a very noteworthy move. We knew it was a technical break that essentially had to happen because it had run out of room, but it went absolutely nowhere. We had that big break, and then subsequently it completely dried up almost immediately afterwards. It's exactly what we'd expect with these types of conditions. Unless we actually see the market running on a consistent theme, and it doesn't have to necessarily just be risk trends. It doesn't have to get to the point where the Euro USD is acting the role of a risk currency or a risk aversion currency, depending on which way we're going, because remember, this is at the very extreme of that risk sensitivity curve. If the Euro USD wanted to move on interest rate expectations, that would be fine as well, but there isn't something that materially alters the dollar's interest rate forecasts. If we had it, we would have seen the dollar make a more considerable move, and it has not. Even though this past session we did have some Janet Yellen testimony. She finally had her day in the Senate following her testimony in the House of Representatives a couple weeks ago, delayed because of the weather. Everything seems to be delayed because of the weather. But that didn't really give us much of a dollar guidance because she didn't really change her tune. She said that taper was essentially the course setting, and it's really difficult to move us off that course setting. At the same time, on the other end of this currency pair, we're not really seeing much in the way of a change in monetary policy expectations for the euro, although that could change relatively quickly. All right. We've had actually a couple of stories come out. Actually, they're based on polling. I talked about the Bloomberg poll yesterday in the daily fundamentals, and today the Reuters group actually released a polling of economists, and they note that approximately 26 out of 78 total economists that they had polled expected the ECB to cut rates at the next policy decision. That next policy decision, by the way, next week. All right. They also noted that of 63 people that responded, 19 believe that a new stimulus program could be in the works sometime in 2014. That they'll have to go to some extraordinary program that falls outside of the normal rate hike, rate cut kind of regime, and once again increase their monetary policy or their balance sheet. Now remember, this euro is doing quite well, and is doing quite well over a span of a couple of years. And that strength, a lot of it, is coming on the influence of monetary policy, the decline in the balance sheet for the ECB. All right, that's something that we've been watching for a couple of years now. But that decline is going to start to run into some problems. All right, because as we've seen, the decline in the balance sheet is also leaving a lot of these countries exposed, especially Portugal and Ireland, who are coming out from under their rescue programs, and they're going to be going into a market that doesn't have really a strong buffer for yields. All right. Now recall, and you don't really have to call, I'll just show you. Recall that the balance sheet is declining in favor of the ECB, or in favor of the euro, but the interest rate forecasts are certainly still in favor of the US dollar. This kind of deviation doesn't last for very long, historically speaking, and it has gone on for quite a long time here. This is something that I really want to pay attention to in the upcoming 24 hours and next week as well. All right. I have that fundamental view where interest rate expectations are seriously skewed. The markets really expect stimulus out of the ECB, but we haven't seen it yet. And then from a price action perspective, you can see we have this long-term rising wedge that is now finding itself at the very top of a multi-year wedge top. Look at the price action. ATR, which is a great measure of volatility. This is the 10-day ATR or 2-week ATR. And you can see we are the lowest level of activity since back there in July 27, 2007. What does that tell us? Breakout potential. Very significant breakout potential. We have these technical patterns that add to that picture, and then we have the fundamental themes that put us on break watch. All right. We have a big deviation like this, but the catalyst might be something like what we have in the upcoming session, the Eurozone unemployment rate and the CPI estimate. Now remember what happened in the November release, of the November data release. That actually preceded the ECB's last rate cut. Right? Currently they're at 0.25. So they don't really have much room to continue cutting rates, and they're running out of options. So that stimulus conversation is really going to have to start coming back into view. But remember, this is key data. This is essentially the dual mandate for the ECB, like it is for most developed central banks, though they don't actually specifically say that this is their dual mandate. But next week, Thursday, the ECB rate decision. Very, very important for the euro, very important for the euro USD. And this particular currency is the most liquid currency pair out there. All right, it has enough influence single-handedly that it can drive a lot of this market, the euro side and the dollar side. All right, so we have to be very careful of what our expectations are here. But you do have a lot of interesting view from these various euro pairs. Euro Swiss, as I said yesterday, this is looking like it's going to have to break. It did break, but like most other breaks that we have in these types of market conditions, little to no follow-through. The dollar Swiss. Most of you don't consider this a euro pair. Well, I would be cautioning you on those expectations because, and I did talk about the dollar Swiss once again as it's one of my favorite trades for 2014, but I talked about it again today in the strategy video, and this is one of the charts I used. This is the euro USD versus the dollar Swiss, but that dollar Swiss is upside down here. But what happens if I flip it around? This is what they usually look like. This is what they look like when I flip the dollar Swiss upside down. The Swiss franc is essentially a stand-in for the euro for most intents and purposes. So if we talk about the euro potentially dropping because of those fundamental concerns, we have a nice inverse head and shoulders pattern here. This is trying to create a right shoulder. And what's more, it actually has a nice correlation to the Euro Swiss. The Euro Swiss has a big floor at 120. All right, so that is another relationship that can work to keep this thing up. All right, this is why I like this currency pair. But it's making its right shoulder. I have a small entry position already. We'll see if I can add to it if it does have some capitulation from the euro side of things. But the euro, these pairs aren't my only euro interests. Euro yen, all right, this is very much a risk-based currency pair. You know where my stance is on risk. I'm getting sick and tired of seeing these false breaks. I'd really like to see something with the follow-through, but we can only play what is in front of us. We can only trade what is in front of us, and we don't have that consistency yet. Euro might be able to stir things, but maybe we also have a risk opportunity next week with the non-farm payrolls and a set of other event risk, including the Chinese National People's Congress. Euro Aussie, an immediate breakout potential here as well. All right, I like the bigger pattern, of course. If you're looking at the bigger pattern, you have a big head and shoulders setup. But if we're just going for the short term and the upcoming event risk, this might be a wedge breakout potential. Euro Kiwi is at the floor of a noteworthy trend line. This is only a good play if it's a move to the upside, all right? Because if you get a break to the downside, it can continue, but you must be exceptionally careful about expecting follow-through into the end of the week. So you keep that under expectations. Now, the Kiwi, since we're here, did have a very remarkable performance this past session. We did not just get a move to the downside of the Euro Kiwi. The Pound Kiwi did a similar, made a similar shift, and you can see that we are very close to this rising wedge formation here. I like this pair a lot. I like it technically. The fundamentals, on the other hand, are going to get more interesting because in 2 weeks' time, in less than 2 weeks' time, the RBNZ is expected to hike. All right, hike rates for the first time in a while. This is going to be a very interesting circumstance for what happens with the Kiwi dollar, but Pound Kiwi is very likely to hold. The intangible here is what happens with the British pound. And the Kiwi has actually made a break here on the Kiwi dollar. It's making a push here on the Kiwi yen. It's very close to that. And we even have, and on the other side of that, we have the pound making some interesting moves. All right, but it hasn't really committed itself. Next week we have a BOE rate decision. All of this, very interesting mixture, but it's a lot of wait and see until we get to the big event risk. Perhaps the most interesting currency in this past session, and one that I talked about also in the strategy video, is the Aussie dollar. This made a provocative break just this past session to the downside of this rising wedge. As you can see, it dried up almost immediately. All right, it lost all momentum. This is the exact same situation of what happened to the Euro USD. Broke, lost all momentum. This stall is pretty common with risk trends. Even the Aussie dollar doesn't have a really strong correlation as of recent to risk trends. It still stalls pretty easily in these circumstances. This stall was actually the reason that I decided to book the second half of my Aussie yen short. So I booked it for about 110 pips. Not the biggest move. It definitely, I could have almost booked it for 210 pips if I did it at the extreme, but rarely do we hit the extremes. But you can see the level that it stalled at and held up. I decided this was a good time to just book profit, look to see what happens next. If it does want to break below this 91 level, then I can re-enter it, certainly. But until it makes that move, until we get some kind of consistency and risk aversion, particularly, and that's becoming difficult because this continues to trickle higher, this Aussie yen's going to be kind of a struggle. In the meantime, if the Aussie dollar does want to make a more provocative move to the upside, Aussie CAD is still a very big favorite of mine, but it needs to break back above parity. I was talking about this being a test on the bottom of this rising wedge formation. I did not get into that position, but it still looks good. It looks better, however. It looks tradable above parity, parity 50. All right, so I'll look for that move. Until then, I'll stay on the sidelines because I have to be very cautious of these incapable pairs, the pairs that are prone to breakouts but not necessarily follow through. But if you want to play some potential volatility on the breaks, if that is your trade approach, there is some event risk on the upcoming and final 24 hours of this trading week that are worth watching. And particularly, I want to highlight the Eurozone unemployment rate and CPI figures. You have some Fed commentary as well, but this is really where most of the potential lies because it taps into the bigger theme that traders are watching, and that is ECB monetary policy expectations. If you want to look for something, a euro-based pair that can have breakout potential but doesn't necessarily have to generate the trend to play a trade, Euro Aussie is probably the most appealing. Now, I'd love to have an opportunity with the euro dollar, but we're not going to get potential trend from this unless things are really, really deviating from expectations. And that's putting expectations a little bit too far. Right? I don't want to plan for a really out there scenario. I want to plan for a scenario that is very likely to occur. All right? Keep an eye on these markets. We want to keep an eye on particularly the bigger themes like the U.S. dollar and monetary policy that it reflects. We want to keep an eye on risk trends and whether this little trickle can turn into a rain. We want to keep an eye even on the emerging markets. I noted this in the real-time news feed, but the dollar yuan exchange rate, the Chinese exchange rate, this has risen for 8 consecutive trading days. This is the longest run we've had since 1995. All right, emerging markets are making some moves. This is the break of a very serious carry trade. This is going to be potentially a more significant story, particularly next week when we have the People's National Congress in China. All right, but keep all these bigger themes in mind. In the meantime, you can also keep a close eye on the upcoming event risk. The euro pairs are particularly exposed, maybe even some of the risk-based currency pairs like the yen crosses, but maintain expectations. Find what's realistic in terms of trading potential and follow that down its logical path. All right, we'll wrap it up there, and I'll give you another, or actually a new outlook for next week, and a wrap up of the final 24 hours of trading tomorrow.